Hey, what's up, everybody? Just taking a look at the markets this morning, the precious metal markets, and silver is up pretty big this morning. Silver is up almost 2%. It's down a little bit from where it was up this morning because it was over 2% when I first looked at it. So there's a little bit of a pullback in silver this morning, but let's go take a look at gold, see what gold is doing. I believe gold is also up. Gold is up a little bit. It's not up much. It's up 0.13%, up $2. So gold, silver's definitely doing better this morning. But what is the reason for precious metals to be up today? Well, let's go look at the stock markets. All right, so the stock market is down across the board, and I think for a couple of reasons. As you can see up here at the top, stocks fall as coronavirus death toll rises and Facebook shares tumble. Now, and also, if we look down here, fourth quarter GDP rose only 2.1%, and full year 2019 post slowest growth in 3 years at 2.3%. So I think there's a number of reasons, as you can see, why the stock market is down. And I'm going to give you my opinion as to why I think we had a slower growth than what we wanted. I know President Trump and a lot of us who are not rooting for precious metals to go up. I know I am rooting for the prices to go down because it's better buying opportunities. I always believe lower precious metal prices, the better. I root for a strong economy. I don't root for negative growth and for the economy to slow. I'm not rooting for higher precious metal prices. I view when precious metal prices are lower, I view that as a great thing. I know some select few root for the prices to go up, but I do not. I like to see stock markets doing well. I like to see growth, U.S. economy growth doing well, and so we're going to take a little bit of a deep dive into why I think that we didn't hit that 3% growth. I mean, 2.3 is not horrible. 3.2, I'm sorry, 2.3 is steady growth. It's not bad. I don't think it's a recession. I think most economists say recession is when you're under 1% growth for a couple of quarters. But so let's take a look at this and see what they are saying. So the U.S. economy grew 2.1 in the fourth quarter, matching estimates. So that was the estimate. So they didn't beat, they didn't disappoint estimates, they met the estimates. So they did what was projected of them. So the 2.3 growth in the U.S. gross domestic product for full year was below the 2.9 increase from 2018 and 2.4 gain in 2017. It also was well below the White House projection following the 2017 tax revamp. Continued gains in consumer spending helped propel the economy in the year's final 3 months. So I got a couple of opinions on that, and I'm going to give you that. Well, I'm going to tell you my opinion right now on this. Why was spending down for most of 2019 but ramped up in the final 3 months? Well, I think the holidays, Christmas didn't hurt that. I think a lot of people do more spending during Christmas, and it's good to see that people were spending more money during the holiday season. It means that people feel confident, right? People feel confident in the economy, feel confident in their careers, their jobs, job security, and all that. And I was kind of expecting that. I mean, we spent a little bit more money during Christmas this year than normal as well. Um, but I think a lot of why spending was down earlier in the year is because of all the media reports, all of the speculation of recession, um, all of the talk in the media on CNBC. By the way, we are looking at CNBC, just in case I didn't mention that at the very beginning. Um, but but there was no shortage in talk about the bond yield curve inverting. And that happened a couple of times early to mid 2019, and there was no shortage in the media talking about it. So I think that's a big reason why spending was down, consumer spending was down in the early part or in the first couple of quarters of 2019 because of all the media reports about um, the bond yield curve inversion and how it's always pointing towards every time the bond yield curve inverts, it always points to a recession coming up, a recession coming up. So I think that's part of the reason. I think the media um, and all these financial channels and everything put a lot of fear into people, injected a lot of fear into the markets. So I think that's part of it. I think Boeing was another big part of it that this article doesn't state. And I think Boeing was another problem in 2019. So let's take a look and see what some of this article. I'm not going to go through the entire article, but those are just some of my opinions on why I think growth or consumer spending was down. Some might have had some trade with China, trade war might have had a little something extra to do with it. I don't think that was the gist of it, though. I think a lot of it was the bond yield curve inversion and a lot of people being nervous of a recession. And then as we went through 2019, um, towards the fourth quarter, all that went away, all that talk went away. So hopefully there's no more, bond yield curve inversion, fears this year, and hopefully we'll see GDP for 2020 go up to around 3%. And don't forget that GDP for 2019 can always be revised, hopefully up. It can also be revised lower, but hopefully it's revised a little bit higher later on. The U.S. economy grew 2.1 in the fourth quarter, closing out the year, which gross domestic product, okay, we already read most of that. The GDP increase matched the third quarter and met expectations of economists surveyed by the Dow Jones for the full year. The economy grew 2.3%, below the 2.9% increase from 2018 and the 2.4% gain in 2017. So we already read a lot of that. The move in 2019 was well below the White House. Okay, we already read all that. Let's scroll down a little bit. Continued gains in consumer spending helped propel the economy in the year's final 3 months. Though the rates of increase came in at 1.8%, well below the 3.2 pace in the third quarter. Still, personal consumption, let's see, we already read a lot of this, so they're just kind of repeating what they kind of said in their bullet points at the very top. So let's see what helped. Where did we go? What helped and hurt the growth? Durable goods spending rose 1.2%, while non-durable saw growth of 0.8%, the slowest pace since the first quarter of 2018. Non-exports also helped, rising 1.4. The tariff war between the U.S. and China, imports fell 8.7%, owing to a drop in consumer goods and motor vehicles. And speaking of motor vehicles, we might see, if the virus in China continues for a long time, for the next couple of months or so. Hopefully it doesn't, but if it does, we might see a little problem, a little slowdown in the automotive sector because of they were talking about plants in China, auto plants shutting down because of this. So we might, and I think that's a big reason why the stock market has taken such a hit in the last couple of days or last week, is because of fears that a lot of plants and things, places in China that makes a lot of the stuff we buy might not be might be closing or slowing down because of a lot of cities in China are starting to close down because of this virus. So hopefully that doesn't happen either, or we can start making the products here. So anyway, but let me know what you guys think. I'm not going to read any more of this article. It basically just says everything that was in the bullet points, and I think what will also help our GDP for 2020 is the fact that we got the first phase of the China trade deal signed. We got the Canada, Mexico, U.S., Canada, Mexico trade deal signed. I believe it was signed a couple days ago. So I think a lot of that is going to help. Hopefully, there's some more tax cuts in the near future in 2020. I think Donald Trump wants to do some more cutting of taxes, which should increase consumer spending. But in some cases, if there's economy fears, then instead of doing more spending, people are doing more savings. But anyway, let me know what you guys think in the comment section below. Please like, comment, and subscribe. So stock markets are a bit down this morning, and let's just check one more time the silver and gold markets. So gold is now up $5.50, and let's take a look at silver one last time. And silver is up a little bit more than it was when we checked it at the beginning of this video. It's up plus $2 or yeah, $2 and or no 2.2.5% and up 44 cents. So let me know what you guys think in the comment section below. Please like, comment, subscribe, and I'll talk to everybody on my next video. Thanks a lot, everyone.